It's another week of rental house versus high income ETFs. If you are new to this series of videos, we sold most of our rental properties, and one of the last properties we sold, we took that money and we invested into some covered call ETFs with the theory or hypothesis that the ETFs would do a lot better than what we would do if we would have held on to the rental house. And what we are doing, we are keeping track and seeing that will be true. Kind of like a research project in a way. But before we get too far, I'd love it if you would subscribe and like the video and turn on notifications. It would help support the channel. I'd like to get to 1,000 subs. That'd be the first goal I got this channel. I'm recently retired, and what I do in my spare time, I volunteer fixing broken and dilapidated tombstones at a cemetery, or a couple of cemeteries actually. So some of the things I do, I find tombstones that are totally buried, such as the one in this picture here. I dig them up. This one here was broken. I glue it together, make a new base for it, and then I stand it back up, and it all turns out good. You can support me by buying supplies and equipment that I need to continue doing that. So some of the things I buy is like concrete, adhesive, cleaning supplies. I already have tools and everything, but that stuff can get expensive. If you want to help, you can go to this website here and donate a couple of dollars. Now we'll get going. So each week I like to look at the SPY chart, the S&P 500, and see how what I consider the stock market in general is doing. Help me decide if I should be buying or holding off and waiting for a dip. And you can see here, this is the 20-day moving average. We've been on a upward trend ever since the tariff action back in between February and April. It looked like things bottomed out here in April. And then since then, things have been trending upward. The short-term 20-day moving average usually indicates a short-term movement. So you can see it's been trending up. And then we've got the Bollinger Band, the upper and lower bands. And you can see it's like poking along the upper band of the Bollinger Band. So in theory, this could mean a couple things. It could mean that things about ready to break up and keep going higher quickly. Or it could mean that it's starting to get to be the overbought area and it turn around and start going south. The RSI stands for Relative Strength Index and can indicate overbought or oversold. If it gets above 70 to 75, it will be considered overbought, and then you can maybe expect a sell-off a little bit, but it's not that high quite yet. It is trending high. So how am I doing? So my equity's sitting at 83,036. We're up about $700 from last week. And my margin's sitting at 75,000. If you've been paying attention, you all notice that spiked up a little bit. I went shopping for some more stocks. And let's talk about what I bought. I bought another 50 shares of QQQI. So I now have 200 shares of that. And I've added a brand new position, MAGY, the Round Hill Magnificent 7 cover call. It pays weekly on Mondays. So that will add a little excitement to my chart. I'll be updating that a little more often. I bought 50 shares. And I think I will alternate between buying 50 shares of MAGY and 50 shares of QQQI for the next several months until I get each of those close to about 500 shares. And then I may start alternating between buying 50 shares of MAGY and then 50 shares of SPY until I get them both up to 500, then this one up to maybe close to 1,000 shares or so. I haven't quite decided yet. Here you can see where I bought the MAGY, the QQQI, bought 50 shares of each. And this is what I paid for it. And here you can see what I got for dividends in the past week or so. I have a pending dividend of $18 that'll be coming on Monday. I just got a distribution of $628 from QDTE. Going forward, the MAGY, that's this one, that'd be paying every Monday. So Friday, it will probably say pending each week, depends on when I make the video. And QDTE pays each Friday, but it usually doesn't hit my account till late Friday night or Saturday morning. So it will stay pending for the longest time, then it will finally hit. The only difference is that when I look at the margin that I've used, it won't subtract off the margin until it actually hits the account. If it says pending, it hasn't hit my account. It hasn't deducted off the margin at that point. So what else I did last week, I bought those 50 shares of QQQI here, and then down here, the MAGY, I bought 50 shares. And if you didn't watch last week's episode, I got 644 of QDTE last week, and I paid $320 in margin interest. So here's how I'm doing with distributions. I should have left the month of June show so you can see what I got each week, but this is starting to take up a lot of room because I've added MAGY to my spreadsheet. So what I may start doing is taking off the past months like November, December, and everything, and just put the last 2 months on there, perhaps, so that you can see what's happening each week. I'm averaging about $640 a week from QDTE. And you can see that I'm going to get about $20 from MAGY, which will grow as I add more shares to that. AIPI will be around $700 a month. QQQI and SPY will both be a couple $100. GIAX will be about $100. And then we have QDTE again. There'll be 5 varieties this month. So I'll get 5 distributions from QDTE. So I expect this to be well over $4,000 for the month of August. So at the beginning of this project, I projected out what I thought I might do and how things would happen. Over here on the right is how things are actually going and how things are happening. I projected I would start at 70,000, use 52,000 in margin. And in reality, I started out with 70,000. I used 50,000 in margin to begin with. I did skip some months here because this was starting to get crowded. So if you jump to May, by the time May came around, we already hit that downturn of the tariffs and everything. So I was down to 61,000. At one point, I was down to 49,000. But since then, things have been bouncing back. I'm actually 83,000, but I expected that I would have been at 95,000. My margin is 75,000. I would expect that to have been at 71,000. Total invested, counting the equity and the margin that I'm using, is at 158,000. If things would have went as planned, I'd be invested in at 167,000. Originally estimated that I would gain 0.75 of 1% each week. And I've actually been all over the place. I should have another column of my weekly gain to see how off I am with that one. But I do have the total gain. I expect it to be at 36% for total gain. At this point, I'm at 18.62, which is not bad. And this last column is the percent of margin that I'm using toward the equity. So I'm using 71,000, which is about 75% of 95,000. So over here, I got 75,000 that I'm using a margin at 83 in equity. So that's 91%. My maintenance is actually a lot higher than this. It's 25% maintenance. And last time I looked, I still had $40,000 in buying power. In Robinhood, it has the thing that says your risk level is as far as getting a margin call, like low risk, low, medium. I don't know what all the different categories are, but I'm still sitting at like low risk. So I'm not even close to getting a margin call. So speaking of project, this is comparing the ETF to the rental house. So this is how the rental house probably would have went if I would have kept it. So this is assuming no mortgage on the rental house. Each month I would collect $700 here. I would pay $80 in insurance. I would pay $200 in real estate tax. And this would be the balance of the cash account. I also figured that equity in the house would grow at 4% per year, which is $233 a month. So this column here represents the equity growth. And this column here represents the equity plus the cash that I would have accumulated. So I'd be sitting at about 76,530 right now if I kept that house, and assuming no other maintenance costs popped up, which I know people know. If you have rental property, you have all types of maintenance costs throughout the year. I've also mentioned before, at the end of the year, I'm going to go through my last 3 years tax returns and come up with an average cost of those 3 years and then add those in to see how in reality things would have went when you include in the maintenance cost. So when you figure it, that rental house is worth 76,530 and the ETF is currently worth 83,000. This is from November 1st, 2024 till today, which is middle of August. So about 9.5 months, I'm $6,500 ahead on the ETF. So basically double. So I started at 70,000. The house is at 76,000. ETF's about 83,000. So they basically doubling what the rent is doing at this point. So this project is going very well. I was very optimistic. If we wouldn't have had the tariff talk and the down market in April, I would expect it to be further ahead right now. But it is what it is. And I'll still take it almost up 20% for the year. You can't argue about that. So I hope you enjoyed this video. And if you want to keep updated each week, go ahead and subscribe, and I'll see you next week.